Joe, I would frame you as a venture capitalist with a knowledge base in fintech, the banking sector, but you also have your own exposure to First Republic. Can you just tell our audience what that exposure is?
Yeah, so as a VC fund, we have portfolio companies in our operations which run on both Silicon Valley Bank and First Republic.
So, Joe, this outcome, what do you make of it? I mean, JP Morgan becomes much bigger, but they've stepped in and saved First Republic, essentially.
Yeah, I would say this First Republic incident is a little bit different than the Silicon Valley Bank incident in a few ways. SVB was largely unanticipated, but in the case of FRC, most VCs and founders have already made contingency plans in the last few weeks. So in fact, most founders, entrepreneurs, VCs now have several bank accounts with different banks. And so, we're not unprepared for the transition here now. Our accounts at FRC would roll over to a new acquirers, JP Morgan's account, so that would ensure continuity. But I think on a broader sense, the difference between FRC and Silicon Valley Bank was FRC has also a larger non-tech consumer base, and I think this outcome helps ensure the continuity of that. But for businesses and tech businesses and the VCs, we've already been largely prepared for this outcome.
Prepared how? Are you talking about diversification of banking?
Yeah, since a few weeks ago, most VCs and most founders, at least in our portfolio, and the ones we've connected with, and the ones we're seeing in the market, have opened several new accounts at different banks, even in some banks, multiple accounts. And there's also fintech players which are offering a higher deposit insurance than 250 because they're opening accounts with multiple banks. So that ensures you can actually, let's say, add 4 250Ks to get to $1 million. So that's been underway for, since the SVB fallout. And so when, this incident kind of occurred with FRC, VCs and founders have already kind of been making contingency plans. Plus, even if the ones that haven't, I guess their deposits will be insured by the largest bank in the US. So I think, founders and VCs feel much safer this time and secure this time than last time.
Joe, even for private market participants and VCs, there are some big picture questions, one of which is, what does the Fed do this Wednesday?
Yeah, financial stability was always sort of a third objective by the Fed after inflation and unemployment rate. If you look at sort of Fed's Chairman's remarks, I think he did say in the presser that we expect to inflict some pains, and I think what's happened here within the broader financial system is not inconsistent with what they would anticipate. I think the real question in my mind is, to what extent will the banking crisis and fallouts sort of deter the Fed from raising rates? In my view, they're probably going to raise rates another 25 bips at this meeting. But in my own view, holding rates at 5.25 to 5.5 is also very, very restrictive. And so financial stabilities become a large concern for the Fed and might actually deter the Fed from raising rates further. But by keeping rates at current levels, they're still being very restrictive on financial conditions, and that could really kind of temper down inflation over time.
What is the environment like right now, Joe, for VCs like yourself considering writing checks for startups trying to raise money?
There's two schools of thought. My own school of thought is this is actually the best time to invest because valuations are down, and we believe this is a healthy reset for valuations and companies. But there's another school of thought, which is many VCs are actually kind of holding back from investing. And so, but within the broader system, there's, amongst kind of this period of weakness, I would call the whole AI kind of a generative AI sort of innovation has been introducing some new life back into the ecosystem. So I think broadly speaking, most VCs are slowing down, not only on investing, but LPs are slowing down on investing in funds. But one bright spot is generative AI, which seems to offer a lot of new blood and excitement back into this ecosystem.
Hey, Joe, there was a guest on Bloomberg Television earlier saying that banks and markets don't have crystal balls. They don't have clairvoyance. But as you look into the future, does the JP Morgan intervention kind of settle things a bit for now?
I think in the short term, yes, because JP Morgan, and I looked at the assets, they're 15 to 20 times larger than FRC's assets, and that should really contain sort of the spread of the bad assets. But also, I think having and there's debates on whether it's politically viable or not. But I think having the largest bank to kind of step in and contain sort of this issue kind of helps restore system, kind of very much like in '08 and '09. But I guess the question is, are we fully through the banking fallouts? I think for large banks, which have regularly passed the Fed CCAR test, the stress testing, I personally think they will be fine. I think mid-sized banks, management who haven't been on top of it would be on top of it now. My actual concern would be with the smaller banks, which maybe I would expect to see a little bit more stress in the banking system on the smaller side.
Right.
I think for the larger banks, I think the crisis in the short term contained.